Hey, what's up, my friends? So, welcome back to this week's market analysis, alright? I'm a little late, right? I usually publish this video on a Monday, but today is already a Tuesday, but hey, better late than never, right? So, in today's video, right, I want to walk you through a potential setup I'm seeing on Canadian yen, right? So, you can see that this market is clearly in a downtrend. Alright, a series of lower highs, lower highs, lower highs, lower highs, and lower lows. Very obvious, downside. Market trending towards the downside. So the next question is, right, where do you want to trade from? Where do you, want to do business, right? So what I'm noticing on this particular currency pair, right, this is the Canadian yen daily time frame, is that this market tends to, respect the 20 period moving average, right? This is the red line you see is the 20 period moving average. It bounced once, twice, almost a third time, right? So if you ask me, right, there's a good chance that this market, could bounce off again. Okay, so needless to say, the level that I'm looking at, right, is possibly when price retrace back towards the 20 period moving average, and then it continues the move lower, right? I won't really look to short right now. And why is that? Because, right, if you think about this, right, if you were to go short right now, say at this level over here, this is your entry price, you go short, where will you put your stop loss? Right? Let me change color, right? So let's say your stop loss, let's use red, right? Would you put here? No, right? Doesn't really make sense because there's a good chance that this market could rally higher and then bounce off the 20 period moving average and then continue trading lower. So it does not really make sense to put your stop loss over here because you're just simply putting it within the noise of this particular market, within the ebb and flow, within the retracement that, within the level where the market could retrace to, right? So how about this? Would you put it over here? Not really as well, right? Because you're putting just flat at the 20 period moving average, right? So it's not really a level that you want to put your stops at as well. So if you ask me, right, you want to give it some buffer, right? And possibly, right, putting it beyond the 20 period moving average. Maybe say somewhere here. Give it some buffer from here to here, right? This is the buffer. Okay? So if that's the case, right, if you were to go short at this line over here, this black line, and your stops is over here, it can be pretty large, right? So this is where patience actually pays, right? If you ask me, right, a better way to trade this is to wait for the market to come towards a more favorable level, and then you can have a tighter stop loss just beyond the 20 period moving average. Let's say somewhere here, right? This is your stop loss, right? And your entry can be somewhere here, right? You got a much tighter stop loss. You have a smaller stop loss. You can put on a larger position size because of a smaller stop loss, right? And still, have a fixed risk percentage on this trade. So this, if you ask me, right, is definitely, a much favorable location to trade from, the Canadian yen. Okay? So this is one, straightforward setup to trade this Canadian yen, right? Maybe let's say the market rallies higher, right? And then, it gives you let's say a candlestick pattern, right? A reversal candlestick pattern like a bearish pin bar, etc. And you can go short based on this entry trigger, right? I don't trade off this pin bar in isolation, right? I hope by now you can see how we actually build up our case for entry, right? Number one, we have the trend. Number two, right, we are trading from an area of value, which is the 20 period moving average, right? And number three is the potential entry trigger, right? Alright, so this is one way you can go about trading the Canadian yen. Alternatively, right, if you are, someone who is comfortable using multiple time frames, right, you can go down to the 4-hour time frame and, trade the structure within the 4-hour time frame. So you can see that on the daily time frame, right, again, this is pretty much an area of value where, price could potentially come into it, right, get a bounce and then trade off lower, right? So for traders who wants to, get an even more favorable risk to reward, you can go down to the 4-hour time frame, right, and, watch how price reacts to this level over here, the 82,500 level. It comes into here and maybe gives you a entry trigger to go short. You can potentially go short at this area on the 4-hour time frame in expectation of lower prices, right? And your stops again, right? You can, give it some buffer above this highs, right? Let's say, about here, right? Give it some buffer so you don't, get stopped out too early. Okay, so this is another way that you can trade the same setup, right? But it's actually on different time frame. This is the 4-hour time frame. So of course, right, there's really no right or wrong way to do this, right? The daily would be suitable for those who, let's say, have a full-time job, you can't really devote much time watching the markets, then yeah, you can just trade off the daily time frame. For those of you who have a little bit more times on your hand, who want to be more, actively trading, this would be an area to look for on the 4-hour time frame, right? In expectation that this market could, continue trading lower, right, after it, retests this area. So this is for the Canadian yen. All right, moving on, I just want to share with you another setup, right? This is the bond market. This is the 5-year treasury. I think they call it the treasury note. All right, so you can see that this market basically, right, we had a breakdown over here, right? This is the area of support, right? Price, was basically in this range. Then it broke down, right? So to be honest, right, I got stopped out of this trade, right? Because I expected, for price to retest back this previous support turn resistance, right? This one is over here as well, which you can't see yet, right? But price, basically did prove me wrong, as it closed higher. So basically, I'm not sure if I covered this last week. I mentioned that I want to go short on this this bar over here. I went short entry over here. My stops is 1 ATR above this high somewhere here, and I got stopped out. Right? So I'm re-evaluating right now, and I'm thinking to myself, right? Clearly, right? Traders who are short basically got stopped out, or they are currently still in the red. So I'm looking at this, and I look at this as a range market. Okay, and this could be a potential reversal. Right, you can see that price has right now closed back above resistance. Right, so there are a couple of ways to trade this bullishness, if you ask me. Right, because if you think about this, right, if this weekly time frame, if this really, this level of support, right, this proves to be a false breakdown, and this, area of support does hold, this market should have no problem, right, retesting back towards this area of resistance over here. So there's pretty good upside for this market, right? And this is the weekly time frame. So if you go down to the daily time frame, or even a smaller time frame like the 4-hour, you know that from a risk to reward standpoint, it can be pretty favorable. All right, so how can you trade this bias, right? So let me share with you, right? So a simple way to do, right, is the daily time frame, right? So what you've noticed right now is that the market has broken above this area of resistance, right? We are anticipating that this is a double bottom, right, that the market would continue trading higher. So how do you get an entry into this potential move towards the upside, right? So one way is to wait for this market to form somewhat of a flag pattern, right? A bearish flag pattern, right? For those of you who are unfamiliar with flag pattern, is basically a continuation pattern where the market moves higher, it retraces, right? This looks somewhat like a flag, right? I'm from Singapore, so this is potentially a flag, maybe I won't call it a Singapore flag, but basically you know what a flag is, right? So this is a flag pattern, right, where the market basically tries to retrace lower but just couldn't, right? So usually, right, based from a price action perspective, the price action in this retracement is usually consists of smaller bodied candles, right? You see the range of the candles are usually very small. Okay, so this is a clue to you that the selling pressure isn't really there. Because if the selling pressure is there, you won't expect small bodied candles. You expect large bodied candles where the sellers try to push price lower, right? So a key thing to look for is to see smaller bodied candles on this retracement, right? So if there is, right, what I would like to do is to place a buy stop order above this high. So this means that if the price trades higher above this high, I would go long. Okay, and how do I set my stop loss? Again, I would set my stop loss, right? Let's say this is the low. I'll set it 1 ATR below this low, which is, let's say, somewhere here, right? My stop loss, and this is maybe my potential entry, right? So this is roughly my plan on how I look to trade this 5-year treasury note, right? I'm not sure whether the term is it 5-year treasury note, 5-year treasury bond, 5-year treasury I don't know what, right? So they have different names to it, but basically this is the US 5-year bond, right? I'm not exactly sure what is the precise terminology, right? But there's no point trying to get too fussy with all these nuances. Okay, so yep, that's all I have for this week's market analysis. Looking at a couple of trading setups, right? Number one is the CAD yen, right? Looking to sell this, and number two is the 5-year bond, right? Looking to go long on this if the entry trigger is valid, right? So these are the two markets I will be watching this week, right? And I will only trade it if there is a valid entry trigger to enter the trade. Okay, so if you've enjoyed this week's market analysis and you want to learn more about how I trade, I recommend, right, going down to my website. You can see over here, right, tradingwithrainer.com. And if you want to learn more, right, I would suggest downloading this guide, right, the ultimate guide to price action trading, right. In this guide, I will share with you, very practical price action trading tips, right. How to identify, when a breakout will occur, a simple, strategy to, catch and ride momentum in the markets, right, and much more, right. So this is completely free, no credit card required whatsoever. Just click this one over here. Alright, put in your email address so I can send the guide to you. Okay, so yeah, that's all I have for you in this week's, market analysis. I hope you've enjoyed it. If you do, right, feel free to hit the subscribe button below and the like button, right? And with that, right, I wish you all good luck and good trading. And oh yeah, right, I'll put this link to my website below so you can access it easily, right? So with that, I wish you good luck and good trading. Talk to you soon.